lot of sort of incorrect economic concepts in the crypto space. Banks are forcing the 10-year higher so they can keep mortgage rates higher. So there's three things wrong with it.
Yields have gone straight through the roof. Since the Fed began its historic 10-year yields have gone 3.6 to 4.7. What the hell's going on?
The short end of the curve is not what mortgage rates are based upon. And the Fed is not aggressively easing anymore. James Fishback said, take Trump seriously, but not literally.
But something is inflationary and the Fed's not fighting it appropriately.
There's a lot of little stuff that's losing its deflationary edge, and that's even before Trump gets in. If there's anything Trump does that's...
Donald Trump could be more inflationary than not because supply solutions take a long time to help inflation, and that could be 2026's thing.
Mike was very right in the last show on the potential weakness coming in the equity market.
Over the next couple weeks, I am watching for a significant bottom in gold to start the next pretty powerful leg up.
This is the Futures Edge Show. I'm Jim Uriel. That's Bob Iacchino. That is Mike Arnold, Chief Strategist for Path Trading Partners. Before I start, some housekeeping. The popularity of the show is taken off. We get routinely 100,000 views. You guys are the best. It's because of you guys and the support. Any DMs, retweets, subscriptions, even likes, we so greatly appreciate it. Remember what our mission is? Bobby and I are both in legacy media for a long time. Legacy media is bullshit. You're always at the whim of some overzealous producer or sponsor. We here are creating a platform we can say exactly what we want, when we want. We may be wrong, we may be full of shit, but it is our honest wrong opinion that you are hearing, and we think that's important. Wording is important. Also, thank you to our sponsors, Hardcore Italians. They are the best. Use our promo code for 15% off. Our promo code is FU, and it stands for Finance Unfiltered, you weirdo. I don't know what the hell else it could mean. I don't even know why you would even insinuate that, people. Bobby, you got anything to add?
No, I do want to talk about, in terms of legacy media being full of crap, again, just go back and look at the actual words Trump said about not ruling out military use to take Greenland and Panama. And also the suggestion of the 51st state for Canada. And just everybody calm down when he says crazy shit. It's like James Fishback said, take Trump seriously, but not literally. He just talks. That's what he does.
Things up.
I used to do business with a lot of New Yorkers. I didn't like any of them either.
But you New Yorkers who are my clients, I love you guys.
Just you specifically.
Right. Yeah. All right. Michael, you got anything before we start? Because we got a lot to talk about, it seems like.
You guys have left me speechless already to start off the year, so I have nothing.
Can we start with 10-year yields? Because this was recording on January 7th. We had a interesting auction today that went pretty well, better than I thought it would, but not great. A lot of people were upset with it. Yields have gone nothing but straight through the roof since the Fed began its historic easing cycle, trying to bring rates lower. 10-year yields have gone from 3.6 to 4.7. What the hell's going on, Bobby? You have a fundamental opinion on that first or no?
Yeah, I do. So it was funny. I was actually listening to a crypto space yesterday, and I heard a lot of sort of incorrect economic concepts in the crypto space. The crypto talk was amazing, but I think these guys need to take a little bit of economics 101. I mean that with all due respect. In case anybody knows who I'm talking about, I doubt they did because I usually jump in those things anonymously at first. But these guys were talking about how the banks are forcing the 10-year higher so they can keep mortgage rates higher, even though the Fed is aggressively easing. So there's three things wrong there. Number one, banks don't force mortgage rates anywhere. They relate them to somewhere between the 10 and the 30 year. And the 10-year yield has been rising, as you mentioned. Number two, the short end of the curve is not what mortgage rates are based upon. And the Fed is not aggressively easing anymore. If you look at the CME FedWatch Tool, as of today, it is January 7th. So when you're watching this, it's a week or so later. But literally, the market is only pricing in now 25 basis points of rate cuts, and they're pricing in it in June. And it's not even a very high probability price in, right? If you look at the sort of probability tab that sits on that CME FedWatch Tool. It's a June cut. It's only at 44.8%. Unchanged is at 32.9%. Then there's a little bit of a 50 basis point being priced in, and you can go from there. When you see the 10-year running like this, to me, given where the Fed is definitely in an easing mode versus a tightening mode, right? If you had to lean one way or the other, it would be toward easing. That's inflation. That's the markets pointing to the potential for another move up in inflation.
And I'll add that they might be saying that Donald Trump's inflationary too, is what the market might be saying.
Sure.
Correct? Yeah.
Sure.
But something is inflationary and the Fed's not fighting it appropriately, and that's why 10 years have shot through the roof.
So, I mean, any comment on the ISM prices paid number today?
It was big. It was big. It was high.
It was big. I mean, you got a lot of stuff that's not pointing to disinflationary trends anymore prior to that.
The fact that you brought that up, Mike, I'll say something that adds to what I said a second ago. Services, this was services prices paid. That's wages. Okay, essentially a massive component of services prices paid is wages because it's services. So people are getting paid more, therefore the service is being charged more. It's not manufacturing. It's not technically a product that's being sold. It's a service that's being sold and the people are being paid. So that is wages. And when I look at Mike Singleton's work lately, he sees an accelerating wage component through most of the economy. It's Mike Singleton from Invictus Research. So that's wages. I thought that was important. I think that's part of the reason the 10-year yield is rallying.
And even the manufacturing prices have not been, they're sticky above 50. So it's not like they're dropping and prices of goods are dropping necessarily. And we have the potential of other stuff like overall ags are picking up inflationary. There's a lot of little stuff that's losing its deflationary edge, and that's even before Trump gets in. If there's anything Trump does that stokes inflation. So, I mean, that's just from the fundamental. Now, from the technical standpoint, back right around the election, it shifted to, I mean, we're already rallying in yields, but that was really the tipping point. And the target was 4.7 based off the harmonics. And we ticked that off today. I mean, that's been the target since the beginning of November, and we just ticked that off. Does that mean it has to stop here? No. But I was watching it for return to the area of the 23 highs, and we're within that area of the 23 highs, and we don't have a major topping pattern. We have some divergences, sort of a waning momentum prior to today setting up, but nothing yet. We don't have a significant topping pattern that says yields need to materially pull back on the 10-year yet. Any pullback, unless we set up a significant topping pattern, can still be bought on a short-term basis from our perspective. Now that can change by next month, but there's no pattern we can look at. Like when we look at the S&P, we'll see, hey, there's possible topping patterns in place. We're just waiting for them to potentially trigger. In the 10-year yield, there isn't a massive topping pattern. We actually have a big, this is a monthly chart, we've run up. We've consolidated since October 23. We've been in a major consolidation pattern, and it's looking to resolve higher. So we could possibly break back into possibly even above 5% on the 10-year yield again.
Is that a Head and Shoulders top, Mike, that went through the fail-safe?
This is a head. No, it was the too askew on the shoulders. It was not.
Okay, fair enough.
It was just a sideways. If you look at the weekly, it was essentially a pullback flagging pattern that we've now broken above the pullback flag also, which also says we could easily see, unless something materially changes very quickly, we could see yields eventually climb back above 5% on the 10-year, which I don't think will make Trump happy.
Hey, Jimmy.
Yeah.
So you are the most interest rate experienced here of the three of us, specifically to interest rates. Is there a characteristic to yield? I mean, do you see like this sort of wide band of consolidation often, or is this sort of a different regime for you?
Well, there are a couple things I'd like to say to it. The fact that the Fed started its easing cycle and rates and the yield curve has steepened is highly, highly unusual. I'm not even sure it's ever happened before to have them scream higher like they have. Now, to address your question, at least partially, twos versus tens usually trades an historic average about 105 to 109. What's it trading at now? About 40?
38.
34.
38. So again, I suggest that it has a long way to run. I think 10-year yields specifically are going up higher because it's three different factors. I think the market thinks that the Fed is easing too quickly and there's still inflation pressures. I think they think that Donald Trump in the short end in 2025 could be more inflationary than not because supply solutions take a long time to help inflation, and that could be 2026's thing. 2025 is probably aggregate demand picks up because of deregulation and tax cuts. So I easily think the 10-year could go to 5. And even if the 2-year underperforms, that's still going to only be around 60, 70 twos to tens spread, which I think is flatter than normal. The normal spread is 110. So I think, again, for a year, I said I have this trade on, not a year, 6 months. And I did take it off and then didn't restate it. But I made good money on it so far, and I would still have it on if I wasn't an idiot. Does that make sense?
It does. So when I do the Treasury settlements, because I track the yields every single day, I use the Department of Treasury, treasury.gov website, and I go to the official settlement page. And based on the settlements, we close today, again, this January 7th, at 37 on the twos, tens. Based on the futures, it may have moved lower, as Mike mentioned, 34. Can you guess when the last time we had that high of a settlement was?
No. When was it?
April 8, 2022.
That's a long ass inversion, man.
That is unbelievable to me. April 18th of 2022, we settled
I see it
at 39.
Yeah, I have the chart up right now from the Federal Reserve Bank of St. Louis. They're 10-2s.
Yeah.
Which, interesting enough, we just completed this is on a weekly basis, but we just completed. I was charting a double bottom pattern, which was triggered back in September 23. Finally, just last week, reached completion at 31 basis points. And then you can see right here what you're talking about just on this weekly chart. The last time we were at this level was roughly end April, beginning of May of 22.
It's funny, you didn't really take a lot of heat taking that trade.
No, just went sideways for a while and then broke higher.
Yeah.
And I had you guys know this. I had the trade on again. I should have made beachfront property money, but I just made a couple grand because I didn't have the trade on huge. But I liked the trade a lot.
You may divert the water from Colorado back into Colorado money.
Exactly. I'm going to build a dam, so Mike has to be thirsty.
Oh, boy.
Brother.
Hey, Mike, I want to point out for those of you that watch this monthly show that we do with Mike was very right in the last show on the potential weakness coming in the equity market. So, Mike, I'll leave it up to you which one you want to look at first, because you didn't say that there was a trigger to the downside in the last show. You said there's a high probability for potential short-term weakness. So pick one. I don't care which one it is, because that's definitely come to pass.
Well, let's take a look at the S&P. We started, it actually went to, we were running out of steam up here. We had a lot of divergences, and I said I was watching for the possibility of downside weakness. We got a huge sell-off on the 18th of December. And interesting enough, that's shifted the short term, the daily, to bearish mode for me. So I've been looking to sell rallies, and the daily is still in bearish mode. And even on this most recent run-up, could not get back above the 62.5 harmonic. And by the way, on the weekly, you see this weekly chart is still technically in bullish mode. Now, it might seem like an odd thing, daily in bearish mode, weekly on bullish mode. Well, the bullish mode on the weekly could be changing soon, especially could be shifting to neutral mode if we close below 5,900, which we have not yet.
5,900, is this the futures or the SPX?
This is the futures, 5,900 on the March contract. Okay, now that would put me in neutral mode on the weekly, which means I can look for both buys and sells, but still bearish mode on the daily, which has me favoring sell patterns on the shorter term time frame. If we close, however, on the rally at going into Christmas that ended roughly on the 26th of December, and then Santa never showed up, it eked out just barely by a few points that it put it in technical double top territory. Now it's a sloppy double top, But that means the low from Friday, December 20th, which was 58.66. That's key. If we turn around and close below that, the targets to the downside are about 57.45, 56.83, 56.24. I'm really interested in that first potential target if we do close below that December 20th low, because that would put us back in touch with and this is a contracted back adjusted chart, but you can see the last time we tapped the 200 was back in August of 24, and now we've continued to run up, and we could easily revisit the 200 simple sometime in the next few weeks if we close below that 58.66 level.
Mike, I have a question.
Yes.
Okay, at what level do you think the weakness is over? Because I have my level. I think what it is. I think that middle, that high, where that, what is that, a hanging doji or whatever? What is that? Where you call that one candle? That candle.
It's
something, right? Shooting star.
Yeah. Yep.
Yeah, I mean, I know how I trade it, but I just can't remember what it's called. A settlement above the body of that shooting star. To me, it looks like there's more strength ahead. What would you say would make it more strength?
What I said on the live stream yesterday is fascinating because I said we need a close on a daily basis above 6,068.25, which is the 62.5 harmonic. That is this purple line right here, because that shifts the probabilities. Yesterday, now this won't be out till next week, but yesterday on Monday the 6th, we came up that level to the tick and then sold off, and then today rolled over. So that level is even more important, not only because before yesterday it was a 62.5 retracement harmonic from the highs back on December 6th to the lows on the 20th, it was also validated by running up to that level yesterday to the exact tick and then rolling over. So that is the level on a daily closing basis. If we close above there, then I'll start watching, because the magnet price then comes to around 61.44, 61.50 area that we should at least retest the highs from the beginning of December and possibly then break out higher. But if we do not close above that 6,068.25, then I still have to favor choppier to lower prices.
That's what, yeah. So we're basically on the same page. We're just about 20 ticks apart, right?
Yeah, and then I see, because funny enough, that where you talked about the shooting star, that's exactly at the 75% harmonic.
Interesting.
So that topped out at the 75% harmonic. Then we came back to the 62.5% harmonic. And that's why these harmonics work. So if there's one thing you take away from this, just learn harmonics, and it's completely free to learn. It's 12.5% intervals.
Tell me this. This is a trading view chart, which, by the way, they don't sponsor us and they should. If I dump my Bloomberg, because Bloomberg's 30 grand a year, is this, you have to pay for that chart or no?
No.
That charting service?
It depends on how many indicators you want. There's a free thing that you can do a certain amount of indicators. I pay, but like I just renewed for a Black Friday deal, and I got like a year and a half for $300 of their top of the line service.
So yeah, so not
yeah, I
so
pay
not,
as well,
nothing
but I pay for like a middle tier plan that's somewhere in the range of like $229 a year or something.
Okay. Yeah, I wouldn't care about that. Can you believe that Bloomberg's are 30 grand a year?
Ridiculous. I understand you can easily look stuff up, but if you're willing to double check the work that AI gives you, the answer that AI gives you, between, help me out here.
Well, you had it's a blue screen of death. We should reboot you is what we should do.
I needed rebooting.
Mike, lean over, press the off button.
I was trying to get my dog to stop chewing on a bone.
There's a good one now called Perplexity AI that I almost did some work with, but I decided not to. Between Perplexity AI, ChatGPT, Claude, Grok, you can usually find out things you're looking for that you normally would have had to go to Bloomberg for. Just you got to check your work with those three, because oftentimes they're wrong. The amount of times I'm correcting ChatGPT is ridiculous.
And you know why I keep my Bloomberg, right? Because all my clients are on Bloomberg, and that's how we communicate, right?
Yep.
And that's why it's still 30 grand.
There's no question, right? Yeah.
That's the only reason it's still 30 grand, because I know a lot of money managers that can't give it up because their clients are all on it.
Yep, can't give it up. Right, what a nice system that guy had. Michael Bloomberg, I wish we would have thought of that. Yeah.
Mm-hmm.
Anywho, what do you want to look at now?
Let's just jump to real quick. Also, just to reiterate, I'm jumping to the NASDAQ real quick because the levels on the NASDAQ, now this has been confirmed. We actually have a double top pattern that was confirmed but not triggered. It was confirmed on Thursday, the 2nd of January. In order for the NASDAQ to roll over to the downside, we need a close below 21,006. So just remember 21,000. We close below 21,000 on a daily basis. We could also then reconnect with the 200 simple on the NASDAQ, which is down by about 20,200. So that's what I'm watching. Yesterday, again, straight to that 62% level. You can see the prior one, your shooting star, poked just above that 75% harmonic, but closed above it. We sold off. Then we hit the 62.5, nearly to, again, within a couple points of it, and then sold off today. So the levels that I'm watching for the NASDAQ, in order for me to get bullish and get out of short-term bearish mode, we need to close above 21,881. So just remember 21,900. We close above there. The two prices higher are 22,065 and 22,245. If we close below this 21,000, you have the first target below is about 20,450, and then you have the area of the 200 right around 20,200.
Makes sense. I agree. It's so funny how we, from a technical analysis standpoint, and by the way, we're morphing together over the years since we've known each other, but my stuff comes up with similar levels to yours, but from different angles. But it is kind of interesting, like the shooting star thing. But yeah,
that's one of the best things about technical analysis. A lot of people dismiss.
Right.
I'll leave his name out from now on because we're still sort of friends with him. But there was a guy one time who said, when I was standing next to him at CNBC, he goes, "I don't know what Bobby's talking about. That all looks like lines and squiggles to me." And it's just, I maintain for people that dismiss technical analysis, if you're looking at an income statement, that's technical analysis. If you're looking at that for a stock, if you're looking at a balance sheet or you're looking at earnings, right? When there's an expectation of an earnings level and the earnings level comes out differently, that's like a close below a level, right?
Interesting.
All of this is basic math and mob mentality. And it's the same thing. Everybody's like, I don't do technicals, I do fundamentals. Yeah, you sort of do technicals though.
Right. But anyway, it's about sentiment and momentum. Like, it's not lines and squiggles. He's wrong, and I know exactly the way he said it. I can hear his voice. And again, I like him, but he's kind of a little bit bombastic.
He's a great guy, honestly. But
yeah,
I got a little.
Well, people chart earnings. They compare quarter to quarter. They can draw charts of earnings. You can do technical. It's lines.
Oh, yes.
And you could do analysis on it. It's just a way of charting data.
Amen, brothers. Anyway, what do we got?
What?
Yeah, why not? CL, I like it.
Crude. Now, Crude, before I get to Crude, I just want, one of the things I follow, let me sidetrack real quick. And if you don't want to do this, let me know. But the Thomson Reuters Commodity CRB Index is fascinating. Why I want to jump to this before Crude, because Crude has been sort of on a more bullish run than expected. But here's the big run up from the COVID lows to the inflationary highs that topped out in June 22. We pulled back, and this is a monthly chart, okay? And we've been making consistently higher lows, and we've now been breaking. We had a very big resistance base that we've now broken above, and from that purely technical analysis, which is that foo-foo witch doctor stuff, we close above 301. It shifts the probabilities because that's a close above the 62.5, and we're closing in on it, which that could lead to a retest of the high area from where we topped out prior to the pullback in inflation from the last couple years. So I'm paying very close attention to that. We're getting a lot of undercurrent of inflation potentially building, which we sort of talked about earlier. Now tie that in with crude. If we tie that in with crude on the daily, I mean, we're in this consolidation range since the middle of October, And we broke through that pretty steadily over the past few days. So the prior major resistance of this 70 to 70, 71 to 72 area has been solidly broken. And we could see easily still a potential retest of the high area that we formed at the beginning of October and the high area that we formed in August. And then we're coming back up against some major resistance. Now, overall, we're still in a major consolidation pattern, but this has surprised me from just because you've heard crude's going to slow down in the economy and everything else. Crude, watching for the breakdown, and it's done the exact opposite and broken out the other side. And now we have a rising rotation zone. We're above the 200 simple. We're still in that consolidation pattern, but I could see, running up closer to 76 before you put in maybe a minor topping pattern.
So this is today was the highest close we've had since October 11th. First close above $74 that we've had since October 11th. And you notice, I always like to notice on charts when this is the highest since, were the beginnings of down moves. So, an easy technical way to look at this, we're retracing a down move, right? But you saw that big, huge down candle on October 8th. Right. And then we got a little bit of a rotation higher and then just a breakdown. And this is the range, the lower end of the range that we're still in. And like Mike said, this is definitely still in a consolidation pattern. Right. The interesting part about this is there's starting to be a loud sort of a murmur in sort of the crude oil analyst company, which I like to think I'm a part of to a certain degree. John Hess from Hess Energy was the latest to say that supply and demand are kind of balanced now in crude oil. And we just had South Sudan they had a 10-month force majeure, which was really just a battle with North Sudan. It wasn't really a force majeure. There was risk of military action destroying their entire production capacity. So they just kind of shut it down, called it a South force majeure. They're going to restart production. Now it's only 150 to 170,000 barrels a day. But if it's true, if what Hess said is true, that we're on balance, these little bits and pieces of supply and demand actually start to matter. And we had an increase in supply, theoretically, that was announced today. And we still got a rally out of it.
So I have a question for you, Bobby.
Yeah.
And first of all, thanks for mentioning Sudan. We are huge among the Sudanese people. They watch the Futures Edge all the time. And I'd like to thank you all in South Sudan and North Sudan. But anyway, do you think because my theory from a couple of weeks ago, it worked, but I don't even know if it was right. I believe that the market started to realize that Donald Trump's policies may boost aggregate demand in the short end before the supply side issues come in to make supply more prevalent. And I think the market realized that and was like, okay. And this is where the era of good feeling is in right now, is in crude oil. Do you think that makes any sense?
It does, because again, you can't just turn production on.
Right.
Right.
But you can turn demand on by cutting regulations and cutting taxes.
Regulations. And of course, Biden, did an executive order in his last few days
today,
of his presidency, where he said, no more drilling in any of these lands. Now, Trump's going to have to go in and reverse that. Right. But it's just one more step to doing that. So yeah, there's definitely going to be, I believe, an influx of demand. You look at something so simple as the Trump tax cuts, which are due to expire, right? That theoretically he's going to go in and he should work very hard in the beginning to stop those from expiring, to extend those. That should be the first spending of political capital that happens in this administration, in my view. But they keep saying immigration is number one. Either way, you're talking about an influx of those sort of animal spirits, and that could drive crude oil higher. And even though we're looking at more services strength than manufacturing strength, it matters less for crude oil than it does for industrial metals. Services strength boosts crude oil demand. It does. Manufacturing will give it a second boost if it starts to drag it higher.
What market will you make me on Joe Biden giving posthumously the Medal of Freedom to Jeffrey Epstein? Would you give me $1 million to 1? I'll bet my dollar against your million.
It would be tighter than that.
It'd be, because if you'll give me 10,000 to $1, I'll bet it. I'll bet it right now. Moving right along. No, I like it. So where does crude go then, you think, Michael?
I'm watching for a short-term topping pattern between 75 and 77 coming up.
Fair.
We're getting to cycle tops. We're getting to nearly overbought conditions. It's just then it's going to be watching, okay, when we get up to that level, when we roll over, how significant is the pullback or how insignificant is the pullback? So this is not the place I'd be loading up on crude longs. That ship's already left. I'm watching for the topping pattern and then the pullback to see how strong or weak that pullback is, because that's going to be very telling on the next significant play in crude. There just isn't a fantastic setup right now.
Hey, Mike, this is a good time to look at, you have us above the 200 already, right?
Yes.
See, I have the 200 today coming in at 75.42, and it is a simple. I've just always wondered why, and this has been for years, where our two did not match up. Is there
Are you on a continuous?
Yeah, is that why?
I'm on a continuous back adjusted.
I'm not.
See, if I come in on the non-back adjusted,
there we go. Yeah,
you're looking at 75.50 as the 200.
Okay, that's where I have it too. I have it about 75.42. That's close enough for me, but yeah, no, I don't have it back adjusted.
Yeah, it depends if you're back adjusting or forward. That's why I like to do most of my analysis on a back adjusted chart. However, before I put on trades, I finish my analysis always on the contract I'm trading, which again would not be back adjusted because I'm only looking at that contract.
Why don't you explain to people what that means and how you do it on this platform at least?
On TradingView, you have this little back adjust. It says B-ADJ. What that does, if it's not clicked on, what it does when you roll from contract to contract, it just takes the new contract price and doesn't match it up to the old contract. So it artificially changes all the prior contracts' prices besides the front month or whatever month you're on. Okay, because you can either go to the front month or the second month, depending on which symbol you're using for a continuous contract. So what that does is, in some ways, the technical analysis comes out stronger when you go on a continuous back adjusted chart, especially for weekly and monthly charts. It comes out much stronger. For daily charts, I can do analysis on back adjusted and non-back adjusted, and you'll see me switch back and forth sometimes. But for ease of simplicity, when we're doing something like this, I leave everything on back adjusted to just have the continuous nature in there, because we're not calling out trades on this. We're calling out levels to watch.
Makes sense. Okay, let's hit two more things, because remember, we got to wrap up.
How about gold?
Love it.
Yeah.
Gold, I mean, all right. We went on the massive tear, and I talked about that I was watching for a pullback and or consolidation, because remember, there's two kind of corrections. There's pullback corrections and sort of sideways consolidations. If you look at crude on, let's just go to a monthly chart. And this is where it's really handy to have the back adjusted charts, because you can see I can go back. All these symbols at the bottom, all these purple arrows, are when contract rolls were. But you can see how it looks very, very smooth. Now, on the monthly basis, we ran up into November, and this is where I started talking, and I know I mentioned it here also, where I was starting watching for the bigger corrective pattern into the beginning of January. So far, based off a monthly chart, hey, we corrected sort of sideways, slight pullback into the rising rotation zone. We're nearly at completion of that. So over the next couple weeks, I am watching for a significant bottom in gold to start the next probably pretty powerful leg up, and where we could easily take out the highs from October, end of October, and move beyond there.
This is where I want to stop people and say, watch the last show, because Mike absolutely said that the higher probability in his view was a sideways correction. And then he explained what that was in the gold contract.
Mike, can you get more granular on when we'll know, like what will be the signals that the race is on to the upside?
Sure. We already completed, and this is something I cover. And if you want to watch what I do, just tune in to me on YouTube every day, because you'll get the up to dates. But we finished
That's channel, the Trading Partners YouTube channel. I want to throw that out there,
which is completely free. So all this stuff is taught. It's completely free for people to learn. But we completed a little channeling double pattern back on the 3rd of January, and now we've pulled back. We're still holding that channel. My short-term thing is a move above 2679 with then a follow-through close. The level's 2699.6, so 2700. We start the daily close above 2700. I'm watching for a retest then of the 2750 area, and then longer term, if we settle above 2740 on a weekly basis, it's pretty much off to the races again from my perspective to retest those October highs and then break out from those October highs. And the initial targets on that, let me put those out there, the ones that I will be using. Intermediate target 2860, which when I say intermediate target, that's where I look to raise a stop. So let's say I was looking to get long on a close above 2740 if I was not already long. Then it would be, I'd be watching for a retest of the high area. We break out above there. A stop raise would be at 2859, and at another minimum, the next target 2891, so roughly 2900 would at least be another stop raise, if not a partial take profit, especially if we're having a daily topping pattern occur up there. But those are the exact levels I'm using. And then if we continue to run, because you'll see, I don't change these charts. So one of the reasons these charts, you'll see them on the daily live stream. You'll see them on when I'm on with you guys, because this is how everything's held accountable. I don't just change these levels. I'm showing you right now where to come from. And we have the harmonic cluster right at that 2,900. So that's going to be a very key area when we do resume the uptrend in gold. What would change it all? Because that's always something.
I love the when there, by the way, when we resume the uptrend.
Right. Well, it's based off another pattern. We still have a pretty substantial Elliott wave. This is a wave 4 pullback for any Elliott wave people. And so we should see a resolution and a new breakout of a wave 5. Now, at some point, we're going to get to that wave of 5 and 5 in gold, and then we are going to put in a significant topping pattern. It's just not there yet. If we started closing back below 2550 in the next couple weeks, that would put sort of the damper where I'd start looking, okay, maybe this was premature on the move up. And by the way, I made a mistake on that last level. The longer term level, it has to get above 2730. My level was not anchored correctly. Sorry about that. It's 2730 on a weekly closing basis where I'd start to be getting more and more bullish.
Now you said 2740. I want to point something out, Jimmy, and I've talked to you about this before. Back when I was on the TMZ of social media all the time, sometimes you'd have a quick fill in or something and they'd say, we want to talk about this. And oftentimes I wouldn't necessarily have a fundamental view of that thing. And I would go to the chart and say, okay, which direction is the chart pointing? And in this case, to me, it's pointing up. And I'd say, okay, I need to come up with a fundamental reason why the technicals might be right. And that would be where my opinion on the TMZ would be, right? Yeah. You say, okay, it looks like it's going up. So what would make that happen? And that would be my opinion. You got to be right a lot because of that. So when you look at this particular chart, it's inflation to me again, because gold is not an inflation. It's a three-headed monster with gold and inflation. It's gold, inflation, and what is the Fed doing, right? And if the Fed is not planning on fighting inflation, then gold benefits from an inflationary environment. Go ahead, Jim.
Right. So I look at it similar to you going forward, but I look at it, I think it's an interesting story, because what it is telling us, and I'd said this prior to the election, during the election, of the two candidates, I thought one was terrific for gold and one was pretty good for gold. Now, because the election was a binary, we'd kind of priced in a little bit of both. So we're taking out that premium because the one who was terrific for gold lost the election. So now is Donald Trump still pretty good for gold? So now we're in this kind of battle back and forth, like, okay, he's going to, the dollar's going to be strong. Maybe we don't need gold. Yeah, but he spends a lot. Maybe we do need gold. Deficits might bump up in 2025. But then it all comes back to what you said. Is inflation going to be at about 2.7 to 3% over the next year? Probably. Buy gold.
Yeah. So, Mike, I want to throw a wild card at you again that I'm sure you have all your charts on. Now, I'm talking about Bitcoin futures, but you can talk about whatever you want in the Bitcoin number. My question becomes, is there on the daily, is there a pretty simple double bottom there with a very short target? Look at that. It's already marked. Is there a double bottom there? And if so, did it reach your stop on the move today?
Is there a double bottom? This was, we had a double bottom past here that never triggered, and then it turned into a triple.
Okay, see, I don't have, looking at the Bitcoin futures, I don't have that where you're,
And I've done a lot of analysis on the cash versus the futures, and
yeah.
since the futures ignore the weekends,
Okay, good enough.
It actually messes up a lot of technical patterns. So that's
Okay,
why I
fair
follow
enough.
the cash.
But you could theoretically trade them in the futures.
You can trade them in the futures. I do the
Okay.
analysis, and this is, I mean, we've only had the Bitcoin futures now for a few years, but in that few years' times, it's completely tradable in the futures. But I do the analysis on the cash.
I did a webinar yesterday on Bitcoin futures. And the funny thing to me was I showed this as sort of a real world example of what was happening now on the futures. You can just throw up the futures really quick, Mike, just so I can show people this. And I begged everyone to take this trade and demo if they were going to take it. Okay. I begged them to take it in demo. I said, do not take this live, because I'm telling you, if you take it live, this is going to be one that the 30, 40% of the time that doesn't work, right? So I'm glad to hear that cash thing. That's good to know.
Yeah, here's the futures chart right here.
Yeah.
And it did technically set up, and it did close yesterday. Now, would this have invalidated it? That's the question that you need to ask now.
That's the question I'm asking you.
And that's what I'm going to tell you, because we did not get to the stop raise. So based off this chart, there's very specific rules, but until you get to this first target area where it shifts from orange to yellow, which is based off the futures 105, roughly 105, we do not change the harmonics. So right now it's still the harmonics based off this right-hand side. So either a close below 95,375 or a trade through 94,160. So if the market just collapses back below 94,160 before it closes below 95,375, it's invalidated. If tomorrow it closes below 95,375, it would invalidate, and that pattern would be over. If it turns around and goes back up, because again, it's Bitcoin. You know,
So in this particular case, Jimmy,
just so invalidated, it's not invalidated, and that's the technical invalidation point.
Just so you know, the way that I would trade this particular one is when there's these doubles that close so far above the trigger, I put in a stop to buy the pullback, which obviously would have been filled today. Now, I did not do this trade. Part of the reason, if any of you who watched the webinar yesterday are hearing me now, I said it to you yesterday, not in this. I also left a lot of key points out to try and discourage people from taking this particular double bottom trade. But I would have bought a pullback, so I would have gotten in basically just barely above that 101,435 peak there. I probably would have got in about 101,438 or something to that effect. And then I have a fail safe stop in, which is what Mike talked about, whereas if it just runs away, I call that a fail safe stop, right? And then I would be looking for a close below the secondary level that would get me out on the close. But again, futures, like the close, it could be any time because Bitcoin never stops on the cash side.
Correct.
You know what I did today? As soon as that candle turned red today, I hedged my Bitcoin position by, drum roll, buying put spreads in MicroStrategies. That thing is a Bitcoin might not be a Ponzi, but that MicroStrategy thing, I have
it's a complete,
no confidence.
It's a complete Ponzi. Issuing convertible debt to, I mean, and he was 24%. MicroStrategy was 24% of all Bitcoin transactions in 2024. This thing's going to blow at some point sky high, MicroStrategy.
I'm going to have put spreads on. I can guarantee you that.
As a last thing, Jimmy, unless you have something else you really want to...
Hey, can we look at a couple other charts really quick? Do you mind? There's a couple stock charts. I
want to look at the MicroStrategy stock chart, but go ahead.
I'll do MicroStrategy's up there right now. Then give me two other quick things I want to tell people just to keep an eye on. MicroStrategy, this is MicroStrategy. We had vertical up, pull back. The secondary reaction, interesting enough, came up and has not gotten above the 62.5 and failed both times and rolled over. I'm watching still for rollover plays. The only thing that would shift, and this would be a very short term, meaning something haywire again and everybody's piling in MicroStrategy would be a close above 446. Other than that, I'm watching for rollover plays and this thing to unwind easily back down to around 200.
Amen. That's what I think
Why
too.
would, just a question for both of you, why would anybody buy MicroStrategy rather than just buying small
It's a
amounts?
leveraged bet on Bitcoin. It's a leveraged bet on Bitcoin, but
Who the hell needs a leveraged bet on Bitcoin? This is
I know.
insanity.
It's
that's my
volatility.
point.
God, man,
All
this
right.
is a
Look at
weird
the amount
world.
of leveraged ETFs that are out there, 2 and 3 times. There's so many stocks now that with a specific ETF, which is just a leveraged bet on that stock. It's this market is
money
into a gambler's like panacea. I mean, it's ridiculous.
I agree.
All right.
Yeah.
What were the other two you want to look at, Mike?
I want you to. Well, by the way, did you see the Nvidia bar today?
Yeah.
Wow.
All right,
That's
here we have a. Why I'm bringing up Nvidia is there's a weekly potential double top. I don't care if you trade Nvidia or not, okay? Because I'm not advertising trading it at these levels, but if Nvidia closes below 126.86, so just remember 126, we could trigger a massive weekly double top. That's one thing I'm watching. Also, Broadcom on a daily has a potential double top, and this would be out of the way of the rotation zone if that were to trigger. Why these are two of the high flyers that have been carrying the market recently still higher. And if Broadcom closes below 217, it triggers that daily, and that could lead to a gap fill back to their breakout from the earnings. The target's pretty much that full gap fill. Those are two things I'm watching, not recommending for trading it from a stock perspective, because if they do trigger, I'll even get more bearish and start watching for what we let off the show with for those potential NASDAQ and S&P double tops to trigger, and then we start getting the bigger pullback in the stock indices.
And you guys both agree, like people think, okay, maybe we'll just rotate out of Nvidia and the high flyers. That's not going to be as smooth and as elegant as people think. It's not easy to rotate out of something when it's gained so much market share.
Well, again, you had the CEO of Nvidia talking at CES today, which was supposed to be, hey, and it opened at a new all-time high and then dropped 6%. You start breaking down from some of these key levels, there could be a pretty massive rush to the exit on these things. And, you're going to be competing with people like as the Stampede goes. It's going to be like a Who concert back in the 70s.
Yep.
I want people to know, I know from personal history, Mike is not a perma bear at all. He doesn't get
it close.
Yeah. I've been saying, we've still been in buy, we've gone into short-term pullback mode, but it's still in weekly mode. We're still in potentially buy the dips. That could change. And when it does change, I will change. And then I'll look at the charts and say, okay, here's the bearish scenarios. But as you notice, we always go over a bullish and bearish case, because if you don't analyze the markets both ways, you can get a scotoma and start only seeing what you want to see happen, not what actually is happening.
I like that.
I will be looking up scotoma as soon as Jim
There's no question about it. Mike, a quick question for you. Do you have like retirement 401k money that you don't touch, or do you trade all your money?
There is some that, I'll rotate some stuff in and out of longer term things based off longer term market trends.
Yeah, that's what I do too.
It's not actively traded like on a day-to-day basis.
Right, like a week-to-week basis. That's what I do. I reposition based on different technical patterns and things, right?
Yes.
All right, cool. We done?
We are.
Yeah.
People, thank you. This is the Futures Edge. I'm Jim Muriel. That's Bob Iacchino. That's Mike Arnold, Chief Strategist of Path Trading Partners. Please find him on Twitter on the times that he's not kicked off, and subscribe to his YouTube channel. But as long as you're subscribing to a YouTube channel, subscribe to the Futures Edge YouTube channel as well. Remember, we've had great success at this so far. We're huge in Sudan, as we both said before. That is because of you people. Special thank you to the Sudanese people, and special thank you to the Canadians, who are soon to be the first state of America. We welcome you with our open American arms, except if you're going to bring in any of those socialist policies. None of this works without you guys. You guys have been fantastic with the DMs, the support, the retweets. Thank you so much. Thanks to our sponsor, Hardcore Italians. Use our promo code and the link provided. Promo code is FU, standing for Finance Unfiltered. I don't even have the energy now to make a joke about that. I'm Jim Uriel. Bobby, do you got anything to sign him off or no?
Yeah, as soon as the weather warms up a little bit here, I'm going to go swimming in the Gulf of America.
The Gulf of Uriel, I'm going to call it. Let's just call it anything we want.
Do you have the water rights to that too, Jim?
Sure, it's probably, right? See, we wind it all full circle. Comedically, we wind it all full circle. Yeah. All right. Thank you, guys.
Cheers, guys.
All right. Thank you.